28%, sir. 28%.
28% is a tax rate. So flat 28% will be calculated on the collectible, gain on collectibles.
What is collectible?
Collectible is like antique pieces you have collected, or stamps, or coins, or art.
Okay.
So if you sell that,
It's a
if there is a
gain. Okay,
capital gain,
capital gain based on the sale of those collectibles.
yes.
Okay.
So it will be separately calculated as a 28% tax on that.
The high rate. Okay.
Okay. So again, this will be added in 2A, but it will be used to calculate the taxes on qualified dividend and all. So Schedule D, it will be separately stated. In worksheet, it will be separately stated. Okay. Then we have section 897 ordinary dividends and section 897 capital gains. So these are already included in 2A, so it will not be reported anywhere in 1040. It's a basic ordinary dividend and capital gain. So ordinary gain, or this section 897 ordinary dividend is already there in 1A, and this capital gain is already in 2A. So it's just for the pair, they have to report it separately. Now, section 897 is mainly income from personal holding companies. Personal holding companies are those companies whose shareholding is with, like, number of shareholder is less than 5. And mainly they are earning through passive income. Those are known as personal holding companies. So if you have any dividend income or capital gain through those entities, they are separately reported here, but these income are added in 1A and 2A. So you don't have to do anything for this. It is already, we have already reported in 1040 through 1A and 2A, right? So in
So,
short, yeah.
sorry. So just one question. So section 897 capital gain is, so if I already have a company and if I
Mhm.
get some capital gain through that company,
Uh-huh.
so will I sell shares in that company, that kind of capital gain, or the investments which I have in that company, those are sold and they have capital gain?
Shares, if you have sold the shares.
So if I have Shubham Inc. So if
Hmm.
Shubham Inc.'s shares are sold, then capital gain, or Shubham Inc. has some shares which are sold, can capital gain on that?
So let's say you have invested in S Inc. Maybe $10,000. Okay, 100 shares into $100. Now let's say you have sold out of 100 maybe 20 shares at $150.
Okay.
Okay, so you have a gain of $100,000, right?
Okay, sir.
15 to 20. So this $1,000 will be here reported by SINC when SINC will issue 1099 DIV to you.
Okay, sir, but SINC will not be able to withhold any taxes on this, right? Because it is not part of the payment process. I'll sell it to someone, and that someone will give me the money.
Hmm.
It is between two parties which are not related to Async. So the money flow in the money flow, Async will not be involved. So Async will not be able to withhold taxes on this.
So where to whoever you are selling, that person may withhold if required. Most of the time it is not withheld. Most of
Okay.
the time withheld is zero. But
Okay.
if broker is in between, then broker generally, if they think the value is higher, then they withhold.
Okay. Okay.
Okay.
So, sir, just one last thing, sir. In
Mhm.
this sense, this 1099 DIV 2F is not a subset of 1099B, right? Because broker will not be involved in this transaction.
See, 1099B is mainly by the broker. So broker, if you have anything sold through broker or invested through broker, you may have interest income through broker, you may have dividend income through broker, you may have capital gain through broker. So broker will add all of these and issue 1099B.
Okay. Okay, but someone else can also issue 1099 DIV.
Ah,
So
uh-huh.
anyone can issue. So
Anyway,
that
so
subset
only
thing is
broker
not.
will issue. Only broker
Uh,
will issue 1099B. If
uh,
there is an individual company, then that company will issue only 1099 DIV or INT respectively.
okay, okay, okay.
Okay. So if you see in nutshell, 2B, 2C, 2D, 2F. All of these are added in 2A, right? Now, out of this, whatever exclusion you can take from section 1202 gain, that will be removed from 2A and reported in line item 7 in nutshell. This
Sir,
is
what?
a nutshell.
One second, sir. When you
Hmm.
say this 2B, 2C, 2D, 2F are added into 2A,
Uh-huh.
the total of the four will match with the 2A.
Yes, that should match.
So that is one cross check we can do, right?
Yeah, total capital gain distribution is there. Okay. So adding all of these, you will get the amount which will be reported in line item 7 minus the exclusion that you may get in section 1202 gain. And this amount will be used to calculate the taxes using a worksheet of capital gain and dividend, qualified dividend, right? One
This
A,
is long term. Is it a long term capital gain?
yes, yes.
Sir,
Short term won't come here at all.
Mostly no. So we'll see in worksheet. If you see, mainly it is for long term only. Capital gain tax generally, because capital short term capital gain have direct ordinary slab rate. So you don't need any separate tax calculation for that.
But where the details will be fed?
Sorry?
Where the short term capital gain details, where we will fill it?
Schedule D and form 8949 directly. So if you see, we have schedule D, we have separate part 1 is for short term capital gain, and in 8949 part 1 is for short term capital gain. It will be reported here only. Okay.
Long term also is there, no, in those forms?
Long term is also there. That will be used in worksheet also. Capital gain and dividend.
Because the rate is different, we need to have a separate worksheet, basically.
Yes, yes. Because see what happens, qualified dividend and long-term capital gain have only three tax rates: 0%, 15%, and 20%. So for that, you need to use the worksheet to understand how much is 0%, how much is 15%, how much is 20% out of whatever total long-term capital gain and qualified dividends are.